I must say that there have been some flows into Bata for sure. Monsoons have added the spring to Bata India steps. The stock surged to an all-time high in trade yesterday, fully meeting all analysts' targets. What's working for the footwear maker and what's on the road ahead? Yatin joins in with a small analysis out here. Yatin, very interesting. Why is it that you've chosen Bata?
Neeraj, the stock is at record highs, and in general we are looking at FMCG stroke consumption companies do well, in terms of the performance in the last 2 weeks. And if you look at the move which has come in for Bata, especially in the last 2 months, we have seen a consistent, 15-20% kind of upside which has come in the stock. Of course, there are multiple factors which are working in for Bata. And remember, the company has been doing extremely well when it comes to the distribution, network. They operate close to 1,500 stores currently, and almost addition for 500 stores is seen in the next 4 to 5 years. So nearly they have been looking to add 33% of their total store count in the next 4 to 5 years. They have been adding stores at a very consistent pace, and also importantly the store addition will come in the tier 2 and tier 3 cities where probably the organized players do not have a grip. Bata will probably have an advantage in these regions, given the fact that the pricing for Bata products is quite attractive in the mid-range, and also they are looking to ramp up their premium segment. Apart from this, we have the next slide will talk about how really there's the sales breakup look for like Bata. And interestingly, 70% of Bata sales, and if you look at the pie chart, come in from the men's and the kids footwear segment, and now 30% comes in from the women's segment. So clearly at this point in time, it has been the ratio has been similar, but the company has ambitious plans to raise the women's footwear share to 40%. Probably this is to do with the fact that we have the women footwear market, which has higher sales than the men's segment in terms of the periodicity of sales, and more importantly, they fetch higher margins for the company. Coming to the next slide, and we have three important brands which contribute nearly 40% to the sales, and importantly, the company has been able to up their margins on the back of premium footwear sales. So we have their flagship brand Hush Puppies, wherein there is a significant amount of traction, Power as well as Marie Claire. These are the other brands wherein we have seen good traction, and more importantly 40% of their sales comes in from all of these brands. So clearly that is one encouraging point, and probably market has been recognizing that thing. Now look at the consistency in growth in the gross margins. In the fourth quarter, we had the gross margins which stood at close to 54%. They deteriorated because of demonetization and various other adjustments which happened in the GST regime. And now look at it, from 55% kind of a gross margin, they have been able to up it to a level of 56%, giving them leeway to spend more on ad and promotional activities, which clearly are impacting the sales in terms of the positivity that promotions and ad bring into the table. Margins also have been doing well. 13-14% is the normal range in which Bata has been doing their margin performance. Of course, we had some pressure relating to higher ad cost, higher employee cost, which ate into the margin. But as I mentioned in the earlier slide, the gross margins for the company have been improving significantly, given the fact that there have been strong cost controls for the company. Then the next slide on the valuation, FY19 EPS is seen at close to 20 rupees per share. Currently the share is hovering around 840. So the price to earning multiple is 42 times, and if you look at the 5-year average for Bata, the PE ratio is close to 40 times. So it is trading at the higher range of its valuation, probably at peak valuation, but the market probably looks at the gross margin performance and the store addition performance which is expected from Bata, and they also are looking to ramp up their export operations. So that is also one silver lining which one can look at. Of course, if you look at the analyst recommendation, on the last slide, it clearly shows that most of the analysts had target price in excess of 850 to 860. This is the range in which the market was working at, and most of the target prices have been met, probably leaving little room for upside. But the kind of momentum that the stock has generated, and the kind of uncertainty which is there in the market, which is leading to a shift to FMCG and consumption stock, probably Bata is one stock which is clearly on the institutional radar.